Welcome back to Enlightened Trading. I'm your host, Conrad, and today we have another look at the stock market. So as usual, this is my TradingView page. Go check it out. I just posted an idea yesterday, so make sure you are up to date. And as well, of course, show up on my Instagram page and follow me over there for some fun, for some fun content and some fun along the way. So as I said, make sure you also check it out and follow me over here. And as well, before getting into the market, make sure you are subscribed to my channel and maybe even click the bell, leave a like down below this video, maybe even comment and help me out. I would very much appreciate it. So thank you very much for doing so. Okay, this is the SPY today. I mean, of course, we are now in the weekend. This is Saturday, and it's not going to open until Monday. So for now, I'm going to look back on previous price moves. And as you can see, we moved above this trend line and are now coming up to the next one. And I mentioned this, I think, right here. That I would actually be looking bullish in stocks if we manage to consolidate here longer and move along this trend line. Then I would look for a move higher and actually maybe up then a pump to the 0.618 to around 295 to 300. This would be my next target. I would also be then pretty bullish actually on stocks in general if we manage to move back to the point of 382 Fibonacci at 264 here on SPY. So that would be important in my opinion. So of course this looks very similar, and yeah, this is the S&P 500 index, not the ETF. So looking very similar, of course. And yeah, so as I said, if we manage to move above this trend line and back to the Fibonacci of 0.382, then I would be pretty bullish for a break higher. And if we break lower and break 2,420, then I would look for another retest off the lows or maybe even a sharp break below it. So that would be that for the S&P. Dow Jones, of course, looking pretty similar. I didn't draw the second trend line actually. Just do that. I'm also going to activate the moving averages. So yeah, looking very similar, of course, and the same analysis applies to Dow Jones. So moving to stocks, looking at Amazon, I just pulled this up. So yeah, okay, we still are in this consolidation phase here on the upside. I do think this is bullish. We are consolidating below 2000. I do think this signals strength of the bulls and actually actually increases the likelihood of breaking higher and moving above 2000, and then the next target would of course be 2200. So Amazon still looking pretty bullish here in general. This head and shoulders still has to be confirmed with a break higher. So that would be the next thing I would look out for. In general, still looking pretty neutral here in this consolidation phase. So not any bearish signs yet. Tesla, I do like this daily higher low now. If we manage to at least close above this candle the next following week, then I would say the daily higher low is in a 4-hour time frame. Still is in a small downtrend with lower highs and low lows. So this higher low on a daily still has to be confirmed on smaller term time frames. But I would actually look for a retest of 560 if the stock market in general it moves sideways or moves up a little bit. Then I would look for a retest of 560 on Tesla. And then I would actually be pretty bullish with this the daily higher low in, my target reached. And yeah, just looking of course also like a bull flag, and I would look for a break actually rather soon. I could also draw a parallel channel here on Tesla, so just doing it like that. So looking pretty nice here on the top especially. Just going to save it. So moving to Apple. So we had this trend line, not really too important, but if I adjust it a little bit, then you can see that it fits much nicer in that way. So I would similar to the S&P look for a break off this trend line in the near-term future actually, and especially of course if the market moves higher. I don't like this position with these gaps between these candles. Of course, on SPY it looks very similar. It doesn't make a very clear structured chart. We would have to move to smaller term time frames to assess what is happening. But you can see that this is looking similar to an island actually here on the top, which is usually a bearish signal. An island being a phase of price moves between two gaps here on the top or on the bottom. So I don't like these moves for now, and I would just stay away from Apple, except of course for any long-term positions that I would still do. Google looking, I mean, not similar. I think we had this as a wedge here on the upside. Looks like it now broke. I would actually adjust it to that. So it looks like it broke just recently. We could look for a retest, but I actually think that this wedge won't be too important, and I think a higher low is actually quite possible here on smaller term time frames and on daily as well. So yeah, as I said, I don't think this wedge will be too important. Maybe it will, but I will also stay away from Google trades for now. Looks like there aren't too many opportunities here on the big stocks. Maybe on other stocks. So Facebook, of course, looking very similar to Google, with a similar ascending wedge, a rising wedge, which now broke. So yeah, that's of course not good for Apple short-term, Facebook short-term bulls. But I do think that we are near a short-term bottom here on Facebook. And you can see that this trend line is about to get broken, or actually is now broken. So maybe we'll see a rush to the upside here on Facebook on Monday. So Monday will be pretty important for the market in general, and of course what SPY is doing. So that would be a key thing to look out for. Uber had this crazy pump. As you might know, we have now a clear resistance level here on the top, and I will actually draw it horizontally. So this would be the next target for Uber. If we manage to get back to $28, then I would be pretty bullish here on Uber for longer term. This looks like a potential for a daily higher low here on Uber, looking very nice with now a 3-day correction. Would be pretty standard for the TD sequential, and you can see how important this horizontal support has been, and now how it's becoming resistance. So that's not very surprising that we see now price move off of it and to find out a higher low. So looking pretty healthy in general here on Uber, in my opinion. And you can see this very nice doji candlestick here on a 3-day time frame as well, and of course also on a weekly. Spotify, I think moving mostly sideways. Moving sideways still, like it has been doing for a very long time. So I mean, I don't think there is too much to say here on Spotify, except for its, of course, horizontal resistance. But yeah, that would be actually that. So yeah, that's it for today's episode. Thank you very much for tuning in, of course. And I hope I enabled you another perspective on a technical picture of some of these stocks and indices. So as I said, thank you very much for watching. Make sure you are subscribed to my channel and like down below, of course, and leave a comment maybe even. So yeah, hope you have a great weekend. I'm going to, of course. So yeah, see you guys and girls and people back next time. Bye.